Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, the 19th of June, 2007. The market's closed. The S&P 500 did close with a gain of just about 30 cents on the spiders, or 0.18%. And the volume picked up a little bit from yesterday, but still very low compared to the average volume of the last 20 days. That's what this moving average is, by the way, down here. So it's still low volume. Seems like just real summer trading. No one really seems to be too interested in trading. I see that the readership of my blog kind of dropped off a cliff this week. But for the people who are sticking around, there are still opportunities out there. The market did hold above its rising 20-day moving average. We've still got that 10 below it, so might need a little bit of more back and forth action in here before it can really turn higher again. But the 152.50 level was tested as support. That's the level that we were looking for as the first level of support. 152 below that, and that's the highs from last week and a half ago. But it does look like a constructive pattern in here, and now I think getting back above 153.50 or so might put the buyers back in control of the short-term trend, and maybe we'll get a test of these highs from earlier in the month where it was up about 154.40 or so. The Nasdaq 100, the Qs, these guys closed with a gain yesterday at an all-time high. Today they backed off 2 cents, so really didn't give holding up very well is the way I'm looking at it. We've seen a little bit more volume in here as well today, but overall still very light summer type trading. And when we look at the short term, well, even when we look at the daily time frame, I got to remember to use that little right click and a T for my trend line. But anyways, you can see this prior resistance level does seem to be holding a support for now. And that's got down near this 47.60 level. And what we were looking at, though, really is the better level of support. If we do experience a deeper pullback, is 47.20. We've still got this rising 5-day moving average, so you want to give the benefit of the doubt to the buyers. There's no reason to be looking for any signs of a top because they're just not here yet. And that doesn't mean I think it's going to top out anytime soon. It's just there's no evidence. The semiconductors did gap down and weren't able to recover. So this group has been leading to the upside. So maybe that's one sign that we ought to go a little bit slower in here besides the overall lighter volume. And you can see that they gapped down, didn't quite recover, but were able to hold above that $38 level. 38 had been our target from the inverted head and shoulders. Once again, that was the call last week. And now that level seems to be some support. We've still got a rising 5-day moving average here on the short-term time frame. So still want to give the benefit of the doubt to buyers. You don't want to get aggressive on the short side. If you're a short, if you're an aggressive scalper, then maybe you want to take a look at some short opportunities. But for most people, I would say that's not the right proper course of action. The risk just isn't worth the small potential reward when you're in an overall uptrend like we see here on the semiconductors. And this daily time frame really looks good. The way it's holding up here leads me to believe that maybe we'll get a couple more days of consolidation and then it pushes higher onto higher highs. But the IWM, as I've been saying in here, I think it's kind of more neutral than anything. But it was up 22 cents, or about 1/4% today. So we saw a little bit of relative strength in the Russell 2000 today. And looking at the 10-minute time frame, you can see that 83.50 rather level was tested as support. The market recovered and made a higher high in here from yesterday afternoon and even this morning. So looks like the buyers are coming back to this area that has been the strongest area of this market for several years, really, when you look at the monthly time frame. So we continue to be in a bull market. There's going to be some profit taking along the way, of course. By the way, the people who view this video on YouTube, I do have a blog, alphatrends.blogspot.com, and I'm not always going to post all my videos to YouTube. I can get paid from Rever if people click on the commercial at the end, so sometimes I'll put them over there as well. So keep your eyes on that blog as well. Let's take a look at the stocks that I've been talking about. Cypress, whatever you want to pronounce it, Semiconductor. We got involved here yesterday at 22.20. I suggested raising your stop to 21.98. Today's low was 21.99, so a nice place for a stop. Let's just keep the stop there for now. And Schwab, SCHW, we were in this one at 21.85 yesterday. Got stopped out with a loss of 27 cents today. ZHNE. Again, remember, these are only suggested ways to trade. I don't have all the answers here, but what we're trying to do is find a good risk-reward trade. And some people asked me about the Bank of America trade yesterday. I traded it, so some of the other people did too. I day traded, and that was a good thing because the stock gapped higher and kept running today. So you got to make these trades your own. I see some from the comments that some people are doing that. And the people who are viewing this on YouTube, thanks, by the way, for rating it and the comments, because that always helps the exposure that I get over there and brings new readers or listeners or viewers or whatever you want to call them. But Zhone, I suggested in at 151, and you would have been stopped out today at 149 for a loss of 2 cents. PDC, this one we got involved in yesterday at 1508, and I suggested a stop at 1496. Let's keep the stop there. MCCC, this one did trigger at the end of the day. What's the name of this company? Mediacom. I suggested buying it above 970. So the initial weakness kept you out, but late in the day the stock recovered, and the buyers look like they're back in control. Let's keep the stop in MCCC. Let's raise it a couple pennies from 955 to 958. It does matter to me, those few pennies. If you add them up over the course of hundreds of trades over the year and thousands of shares, it's going to make a difference at the end of the year. Novacea, rather. This stock I suggested buying above 1095. The stock looked like it was going to get going. It couldn't get past this resistance from the last few days, though, and we were stopped out of this one with a loss of 17 cents. And finally, the short sale that I suggested was SEIC. You could have got short that at 58.70. I did short the stock. I took a quick profit in it. If you're still in it, I'd say put your stop at break even in SEIC.